Iyer, the Vice Chairman and Managing Director of Mahindra and Mahindra Financial Services. Thank you for joining us live on the market. You know, of late, the commentary that we have been getting, including from your company, is that the second wave of COVID didn't create the kind of havoc that was envisaged earlier in the for the rural economy and the semi-urban economy. So with that being established by corporates like yourselves, can you give us a sense of the construct of the market and the recovery that you are actually seeing?
So, the second wave did hit badly during the period April, June, and all of us knew the lockdown sort of 90 days, hardly we worked for 15 days in the marketplace, and therefore it had its own impact. But the good news is that as soon as things opened up, let's say post 15 June, we've been seeing very positive sentiment in the rural market. We saw it through June, we saw it in July, we saw it in August, both in terms of overall collection efficiency as well as from demand of product. So, and that market is typically, we have seen it even in the past, when some disruption of this nature happens, they do nosedive, but as things open up, they also climb up pretty fast, and a similar trend has been seen. So yes, I do agree to the fact that sentiments have turned positive, things are looking up good, and all sincere prayers that we don't have a third wave, then I think we are in for a good time going ahead.
Sure. Ramesh, just in extension to that, you've got the festival season now upcoming. What is the anticipation of whether or not you're going to see buoyancy and whether we could get at least closer to the pre-pandemic levels, if not above that?
I think as far as the demand is concerned for vehicles or tractors or pre-owned vehicle, I think we are seeing it very, very high. Footfall at the dealerships are very high. As we all know, unfortunately, the availability of vehicle is an issue at this stage. But as that gets fixed, I would think, the festival season run up to March, the second half will be very, very good. Even as far as collection efficiencies are concerned, we've seen month on month improvement, and the activity levels have gone up. Yes, of course, there are some locations and states where the activity levels are still low. But with the monsoon turning out to be at least average plus, and the farm cash flow will also hold up post-festival. So in my mind, I think post is October, that is maybe 3rd, 4th October onwards, run up to March will be a very, very good period.
Sure. I want to talk about your latest foray now that you are into vehicle leasing and subscription business under the brand Quick Lease. While this is a very strong business model globally, what is your anticipation on how soon it will actually pick up here in India?
I think we are seeing it as 2-3 things. One is, I would think, mid-sized to large companies, even for their CTC cars, etc., for sure are looking at leasing as a clear option. And we do believe that there is a good play out there. The millennials will want to own a vehicle, but not really own in the sense of wanting to pay for it fully, but use it as and when they would need. So I think that segment of customers would want leasing to be a good option, because they may not even decide which state they want to settle down, etc., etc. So I think there are enough indicators to believe that that would for sure happen. I think it's also important to look at, many companies want to go asset light, and they would look at leasing as a clear option. Lastly, I would think the price going up, people do want to kind of, use it and pay for it rather than own it. And therefore, leasing companies will become a phenomenally good option to look at. And lastly, the electric vehicle segment, as it opens up, I think for sure that will be a vehicle which will go on demand through leasing products. So I think we are forecasting that leasing for sure will become one of a very, very important option to consider by various buyer and user of the cars, and even in the commercial segment for that matter. And therefore, we've got into it and we want to make it big.
The shortage of vehicles because of semiconductor or supply side constraints, could that be a dampener and a serious dampener for next 2 quarters? Because companies have told us that, look, for next 2 quarters, we will not expect anything big from, don't expect anything big on the semiconductor demand. I was reading an interview of the global CEO of BMW, and his indication is that till middle of 2022, there would be a challenge in terms of semiconductor availability. So while the business and the economy is on uptrend, this compulsive factor of availability, how big dampener could that be for you?
So I think that will surely be a dampener. As I said, we see extremely high positive sentiments out in the market there, and if the vehicles are not going to be available, it is going to be a dampener, and that would possibly be the showstopper from looking at are we going to pre-COVID situation. But from a financiers point of view, yes, volumes would suffer undoubtedly, but then it also means in a way that utilization of the available vehicle will substantially go up, and therefore the collection efficiencies could substantially improve from that end, because the demand is an indicator of things coming back to normal, and therefore utilization being high, etc., etc. And if the demand is not going to be fulfilled, available capacity will get fully utilized. So definitely volumes will suffer, but I would imagine collections will improve.
Every traditional NBFC company has one thing to worry. How will my model get disrupted because of fintech? We know what is happening on the liability side. We know how things are changing on the unsecured loan side. What is the biggest threat for a company which has a rural representation coming from fintech?
I think clearly, even the rural population does look for small ticket loans because they have a lot of during the year temporary requirements. Like if the school fees is one time, wedding is the other time, or some health hazard is the third one, and therefore there are many such temporary needs of money that does come in, and they've been resorting to borrowing from various sources for this temporary needs. Maybe from family and friends to traders to even in some cases from the money lenders locally. I think that's going to be one where the fintechs will come and play a phenomenally good role in terms of consolidating that demand, using data and technology to be able to deliver against it, etc., etc. So I think that's one space that we've also looked at very seriously, and you must have read, we have already launched a digital FinCo within MMFSL, and we believe that that can be substantially a large business to start with to existing customers, then broad base it to many similar customers.
Sure. Ramesh, the one thing that I definitely wanted to talk about was, given the strong rural sentiment and irrespective of a very big and gruesome second wave, will tractor continue to dominate your product mix going forward as well?
So I think if you look at our book for a very long time, tractor has been somewhere around 16-18%. And that would continue to be because, that's one of a very prime product for us across the country. And as we all know, tractor gets used both for farm as well as for haulage application. And we have yet to see demand come from the haulage side. As infra opens up, you'll start seeing contracting segment buying tractors. So clearly that's going to be one of our very, very important portfolio.
The other thing that I wanted to talk about was, you've indicated a reduction in your NPLs on the back of improved cash flows. Can we expect a declining trend even further going forward?
Of course, the answer is yes. I mean, rural, the second half is always much better than the first half. And in the first half, we have had such a severe impact. And, that gets corrected. And I've been saying repeatedly, one must look at default and delay as two different buckets and not mix the two. So what we've seen as an increased NP in the first quarter is more caused by delay by good customers who did not earn during that period. And they would all get corrected in the next few quarters for sure, because they're all back on street and they're all into activity.
Ramesh, let me ask you a direct question. If I look at the positioning of Mahindra Finance and if I compare with what other NBFC stocks have done in the last 5 years, and I'm not getting into a name comparison here, relative comparison here, I think the stock has not lived up to its potential. There has been a lot of volatility in the numbers. Why is that?
So clearly, if you look at last 3 or 4 years for rural, and we are very, very rural, 95% plus of our book is in rural, and we are specifically in one product segment, which is vehicles and tractor as a family. And therefore, if you look at the volatility is caused by the segment that we have chosen to work with, which is earn and pay segment, and they have suffered the most. But we have stuck to our fundamental principle of strategy being working around this segment of customer in rural and semi-urban market. And it has impacted us during this period. But I'm reasonably sure that if you look at the next 3 to 4 years, the way rural is poised to grow with government focus in rural infrastructure opening up, agri coming back to good contribution from the farm cash flow side, we are reasonably sure what you saw for us between 2010 to 14 is what one could see between now to maybe 24, 25.
I look at the growth in the tractor numbers, and I'm looking at last 6 quarters. I just have the data in front of me. Numbers from Escorts, numbers from Mahindra and Mahindra, numbers from other smaller players. The tractor numbers are not bad. CV business has come back in last 3 quarters at least. Why is there a lag in your business? I mean, there should be a lead in your business because people will first buy it from a finance company. I mean, shouldn't you be the lead indicator rather than the lag indicator?
Right. So if you look at tractor, it's largely contributed by agri buying, and it's normally a very nationalized bank product as far as agri tractor financing is concerned, because they want a 5-year, 7-year, or even upward loan, and that's not been normally an NBFC play, at least not for us very well. For us, the play has been on the contracting side, and which is why I said as the infra opens up and you'll start seeing demand in tractor from the contract side will come in, and you'll see our growth coming from there. So far as the CV is concerned, again, if you look at, they've been largely brought by very large fleet operators. And we have been financing 1 to 5 truck owners, and fleet operator has not been our game. We don't have a great value proposition for fleet operator. They look for very large quantum in terms of number of vehicles they want to buy. They look at a very, very fine rate. And again, it has been a very banking product largely. So therefore, you're not seeing it from our side. And then the demand has also been a little more urbanish when it comes to the commercial vehicle. And when I say urbanish, since the fleet operators are around this area. So put this together and you will have an answer that why MMFSL has not shown that kind of a growth trend. And which is why I keep reminding that, in the next 3 years, 4 years, if you see the demand is going to come from the rural market, it's going to come from the contracting segment. It's going to come from these segment of customers who normally start buying vehicles when this contracting segment opens up, like mining or coal excavation or road projects and all of that around the rural settings. And you will see clearly a trend from Mahindra Finance looking at those changes.
Good luck, sir. And I'm sure there are every reason to believe that things are coming back for Mahindra Financials after what could be called as a very tough rural patch, so to speak. Hope to see you soon. We haven't met for a coffee, COVID times, but now things are settling in. I look forward to that.
Thank you so much. Thank you.